Kiwi dollar, daily forecast, January 9th, FXEmpire.com. The Kiwi dollar had a fairly back and forth day on Friday as the commodity markets were fairly quiet by the end of the session. The world got a good non-farm payroll number out of the United States, but the world also seems more concerned with the situation in places like Europe at the moment. The demand for commodities could wane as a result, and the Kiwi is highly sensitive to commodity prices. The pair would struggle to rise. The 78 level looks fairly supportive, and that is where the market's basically closed at. The 79 level above begins a resistive area all the way up to 80. The setup for this type of candle, this doji, is fairly simple. Normally you just place a trade at one end or the other. If it rises, you buy, and if it falls below the lows, you sell. However, in this case, with the pair being so close to resistance, breaking the top of the doji doesn't necessarily have us buying. In fact, it has us looking closer to the 80 for resistive candles from which to sell. A breaking of the bottom of the doji, however, has us looking to sell this pair immediately. With the headline risk out there, it's difficult to imagine a situation where the Kiwi dollar will absolutely skyrocket. However, it's not that difficult to imagine a situation where the Kiwi dollar would actually fall in price. With this in mind, and the fact that there is a gap from November that has yet to be filled, which is something that's very rare in the Forex markets, we simply are waiting to see if we get some type of bearish action to make an attempt to close that gap down at the 74 level.